Welcome to another episode of Stock Market Today. It is February 12th, 2024, and this is Justin Nielsen here with you, along with David Saito-Chung. How are you doing, Dave?
Doing great. Great to be with you, Justin. How about you?
Yeah, pretty good. It's great to have you on. So we're going to be filling in for Ali a little bit here, and we're going to go over a market that was hitting new highs, but then kind of came back in a little bit. And Dave has some stocks for us. What do you got for us today?
Well, as always on this show, we strive for three. I think we have good luck with three. So let's stick with Monday.com. MNDY is the ticker. Had earnings news. We also are going to cover PHM, which is PulteGroup, a major player in home building, and then finish off with a energy play, also in the news, Diamondback Energy, FANG.
Sounds good. Well, first, let's go ahead and take a look at the indexes. Looks like the S&P 500 was down about 0.1%. Nasdaq Composite down 0.3%. The Dow Jones Industrial Average, that was up about 0.3%. And the Russell 2000, well, that was leading today with a gain of 1.75%. So I'm going to pull up the Nasdaq Composite right now. And Dave, I would love to get your thoughts here. We crossed that 16,000 level on the Nasdaq Composite, and then it looked like we got turned away a little bit after a really strong week last week. What's your thoughts here?
I think we've seen this kind of action before, especially when you hit these nice round juicy numbers, right? 16,000. And it's amazing. At the high of the session, we were coming close to something like about 0.7, 0.8% away from doing an all-time high for the Nasdaq, which goes back to the end of 2021. I believe it was 16,212. So
that's correct.
Yeah, that's a bullish look at what's going on, but clearly there's always going to be some profit taking, and I think it's very possible to imagine algorithmic traders or other funds decide, 16,000 is a good area to be locking in, especially index related gains.
Now, what about the extension here that we have? I mean, that's one of the things we've been pointing out. A lot of stocks extended from their 50-day moving average lines, but every time we say, "Gosh, the Nasdaq looks extended," these stocks look extended. They just keep on going.
This is quite a bull market, Justin, right? And we haven't had this kind of good vibes from both the indexes and the growth stocks for quite a while. I want to say it feels different even from the 2020 post-pandemic, or that big rebound that happened in the midst of the COVID pandemic. I feel like more it has the sort of elements of what we might have seen at the end of the 2008, 2009 bear market, or even going back further, the 2000 to 2002 tech crumbling of the dot-com bubble.
Yeah, and both of those time periods were very strong rallies after devastating losses in those bear markets. I mean, the Nasdaq was down 79% in the dot-com crash, and about 57% for both the S&P 500 and Nasdaq after the great financial crisis. So yeah, definitely strong bounces happen after bear markets, and we certainly had our share of a bear market in 2022, and a pretty lengthy one, considering that a lot of growth stocks really topped in 2021. Let's take a quick look at the S&P.
And also I want to stay on that Nasdaq chart, because this is another point before we go to S&P. Sorry about that, Justin. But I'm really glad that we're looking at not only daily charts, but the monthly and then the weekly charts. And the pullback that happened the first week of January for the Nasdaq was significant. Especially, it looked quite scary on the daily chart. But you can see on the weekly chart, it was just confined to 1 week, and we respected that red moving average, a 10-week moving average on that weekly chart, which was very, very important to watch, because in general we see healthy markets getting pullbacks to the 10-week line, but not sharply below them. And since then, it's been really remarkable. So, maybe we can say the same for the S&P 500.
Yeah, and I mean, we have had 14 out of the last 15 weeks up. We'll see how this week plays out. But yeah, why don't we go ahead and take a look at the S&P 500? This is in new high territory. It reached that, after crossing 48.18. just a couple weeks ago. And so now we've extended above 5,000 for the first time. And again, this is one holding the 50-day moving average line, holding the 21-day moving average line. Not much going wrong here.
Absolutely. And, especially if you've been buying really high quality stocks coming out of bases several in the past 2 or 3 months, you're definitely being rewarded. This is exactly the type of index action you want to see. At this point, we want to now focus our attention on the sell signals that might arise so that we do lock in the gains at the right time, but still also give that let that door stay open for potential further upside.
Yeah, you have to worry about the drawdowns that can happen in any normal pullback, even like what we saw at the beginning of the year. But at the same time, as you said, you don't want to shut yourself off to the potential for even greater gains. Taking a look at the Dow Jones Industrial Average. I mean, yes, it's only 30 stocks, but it seems like the blue chips are, doing very well. This is also in new high territory along with the S&P 500, and was actually kind of the first to get there, but it hadn't really corrected as much as some of the other indexes either.
I think that's an important point. Another point to consider is that the earnings season for the fourth quarter have actually been quite pleasant for the blue chips. So, as an example, we look at JPM, a great bellwether for Wall Street and lending, and you can see that the volatility was certainly there around the earnings. We have an arrow showing you the EPS in mid-January, right? They were one of the first blue chip companies to report fourth quarter results, but it dusted itself off, after a few down days, and it looks like it could be even forming some kind of shelf pattern, which might provide a new entry point. And then let's look at Caterpillar in the heavy construction and mining, as well as agriculture. They also even have a role to play in oil fields with their generators. And so Caterpillar is a very interesting stock to watch. And that stock had moved up ahead of earnings and kept going, which is quite impressive. That recent pullback to, I think it was around 215 or so, that seemed like it was forming some kind of a little mini base on top of the longer base. And this is exactly what you want to see, not just in tech stocks, but any kind of large cap, small cap, or mid cap.
And speaking of small caps, got to look at the Russell 2000. That got above 2000 last week. And you can look at the weekly chart and see that it tried to do that a number of times here in the past. It had a couple weeks above there earlier, a few months ago, but couldn't hold it. You think this one is the one that sticks?
I would hope so. I'm not sure if I'm ready to stick my neck out and say I think. Yeah, but it is encouraging in a positive market environment. And I would like to highlight, Justin, in looking at the 197 industry groups, that a number of laggard groups also participated in today's rally. They ranged from agricultural chemicals, Midwest banks, leisure products, media, TV, and radio. I mean, obviously, we have a big election, right? I mean, these TV and radio stocks are also rising. Solar, home furnishings. It's a pretty broad market. Don't let me also ignore telecom infrastructure and basic chemicals. So all these industries probably have some decent small and mid cap names that are helping driving this. So in other words, the tech, the big cap tech companies clearly making their presence known in like the S&P and the Nasdaq, but I think the Russell and to some extent the mid-cap 400, which we like to look at through MDY, an ETF covering the S&P 400, goes to show, if anything, that people are putting money to work in equities. Yeah. And that's really important amid kind of just a relatively flat action in other markets, whether it's gold, bonds have not really moved that much, even though yields have gone up. It's really equities that, to me, are still the main show.
And it's worth mentioning, that MDY, the Spider S&P Midcap 400 ETF. This looks kind of like a breakout here from a little consolidation. So strong action there. You mentioned that some of the areas that were out of favor, getting a little love today. Utilities, I would put that as, one of those sectors. If you go a little bit broader from the industry groups, that was the big winner today. So certainly one of those beaten down areas, and XLE, and you're going to talk a little bit about one of the stocks there. But let's go ahead and just kind of finish this up with 0TNX,
Sure.
the 10-year treasury, just because a lot of folks are looking at this 10-year treasury yield.
Yeah, I think after just, in fact, about an hour ago, talking with a veteran bond fund manager, Cindy Beaulieu is CIO for North America at Conning, a large institutional asset manager and consultant to pension funds. I got the sense that from her that the bond market is showing a little bit of a correction in terms of expectations for 4 to 6 rate cuts this year might be a little overblown. And when you cut interest rates by the Fed, you expect bonds to go up and the yields to go down. Our chart is showing that the yield on the 10-year has been slowly creeping higher, which is showing diminished expectations for those 4 to 6 rate cuts. Cindy Beaulieu at Conning believes, along with her team, that we'll probably only have 2 to 3 rate cuts as being indicated by the so-called summary of economic projections from the Fed. It's called, also nicknamed the dot plot, and that they wouldn't really be happening until perhaps the second half of the year. This is a very important chart to keep an eye on because the level of the cost of money has so much implications for equity markets, and therefore we're going to be continuing to watch this on a daily basis.
Yeah, and certainly what we saw in the last few weeks here is a little bit more, let's say, volatility in the yield than you normally expect.
Yeah.
Looked more like a stock instead of the slow and sleepy bonds. Let's go ahead and turn our attention to some stocks, shall we? And we can start
Yes.
with Monday.com. And this is one, look, earnings are still coming out on a number of companies, even though the bulk of them are done. And Monday.com, they don't all win.
That's right, and you can't expect a gain on every day of the week. We've been talking about this one on IBD Live, as you know, Justin, and partly because it's part of a great group. I wanted to highlight this one because it just goes to show how earnings can really inject a lot of volatility into a stock, especially with one that rose so sharply 4 days in a row ahead of this Monday morning's results. And evidently, our one of our video producers and executives who also wrote the Market DM newsletter, Alexis Garcia, noted that the drop behind Monday.com was likely due to a soft first quarter sales outlook. I haven't had a chance to really look at all the numbers, but it would probably make a lot of sense that the company is really priced to the hilt. Valuation in terms of PE is more than 5 times that of the S&P 500, even after this 10% drop. On the other hand, this stock is still finding support at a key level, which is that the 10-week moving average on that weekly chart. The 50-day moving average is still below it, below the price, which is indication that the stock, had a really strong run, and the 50-day line is trying to catch up with it. So, I think for those who have conviction in the company, you can continue to hold it so long as it doesn't force you to, take a full round trip of any gains you might have had from the breakout near 189. But it also shows how in some of the stocks that you trade, it does make sense to take some profits, especially when you're up 20 to 25%. In the case of Monday.com, that was pretty much in that I guess it's going to be that 230 to 240 level, and I think that was a good area to take profits, even as you're waiting for the earnings to come.
Mm-hmm. And we do on MarketSmith kind of put that in a green shaded area from the breakout, so you kind of know exactly where that 20 to 25% profit zone is. So a really helpful thing about pattern recognition there. Let's turn our attention to Pulte Homes. The home builders, A lot of them were kind of going sideways for a while, relative strength coming down. I do have a position in this myself. And we put Lennar on Swing Trader today. So talk to us about the relative strength not being at its peak, but you take that step back to the weekly chart, and it really did hold those gains pretty well.
Yeah, that's a great point regarding that relative strength line, Justin. And what I see on the weekly chart in terms of Pulte's relative strength line is that one, yes, it's dipped for a few weeks, maybe about a month at most, but it hasn't dipped very much.
Right.
The overall trend of the relative strength line in terms of its outperformance versus the S&P 500 still looks healthy to me. When the RS line is still making higher highs and higher lows on this chart, then it reflects power in the stock and leadership. And I think you know the stock had a tremendous move in the second half of 2022 through roughly, I think it must have been July, August of 2023. And you look at that area of the chart, the relative strength line was fantastic. I mean, it clearly broke a long trend line. In the relative strength line, trended higher for roughly 6-7 months, and then took a break as other sectors really caught fire, especially chips and software and some apparel retail and whatnot. Now, we had a breakout from a recent cup with handle. I believe that buy point was 84.25. When it broke out past that, then the relative strength line acted strong again and hit new highs. So I think the relative strength line is fine. The reason why we want to talk about this one is because it is now taking a little breather around the 10-week moving average, which can be a good area to add some shares to your winning position, a smaller position, hopefully, than your initial position, because you want to pyramid up and don't cause your average cost in the stock to rise too rapidly. You mentioned that you have Pulte. I'm also investing in some names in this area too. And when you see a stock that you like and other stocks in the group are acting well, you should have even more confidence to go long.
And what's kind of nice about this is it wasn't so much a pullback to that 50-day moving average line or the 10-week moving average line as it was a pause, letting that line catch up to it. So it kind of it ends up being the same kind of thing in terms of your distance to the 10-week moving average line, but it's a lot
Right.
nicer when you don't have to suffer the drawdown as something comes in sharply. Speaking of drawdowns, the oil stocks, I mean, those have really kind of not been participating. This is, when we talk about FANG stocks, we usually are talking about your big tech, but this is actually FANG in terms of Diamondback Energy, in the oil and gas U.S. explorers and producers area, has been in a downtrend lately, but man, what a move today. What was happening?
Yes, they announced a very surprise acquisition. I think it was close to 28 billion worth of a privately held company, Endeavor. Not to be confused with the entertainment side of the industry, of the market. But this just further solidifies their position within a very highly productive area of the United States in terms of oil and gas. And America has risen to the top in terms of production and exporting oil and gas, which is still a critical part of our energy picture. And so I wanted to bring this one up because it was kind of a big surprise. That's among the biggest winners of the day. It included this large cap oil and gas exploration group member, 29 billion market cap. And so if you could imagine, right, if they bought another company that's almost the same size and the stock has such a positive reaction as the acquiring company, you gotta think, wow, maybe there's something really uh, astute about this decision by Diamondback Energy's management. And I think the weekly chart is going to be really interesting to watch, because we've had 3 bases form, or even actually 4, according to Marcus Smith pattern recognition, going back to the spring of 2022, and none of the breakouts produced anything worth boasting about. But now, finally, we have potential for this stock to actually make a really good move for investors. And you take the top of the most recent base at 171 and draw a trend line across a recent high near 161. Arguably, you had a trend line breakout here, and if it works, it should not go back below 160 and should continue to make its way into new high ground. So, we want to keep an eye on the possibility that the market will see more sector rotation. I'm not saying go all in on oil and gas. You can see that the group is one of the worst performers in terms of 6-month price performance, 179th out of 197. But these moves reflect changes that could grow over time.
Yeah, absolutely. And again, especially with so many things being extended, you might expect a little bit of mean reversion, which means that you could get that mean reversion on the opposite side, those things that have been beaten down a little bit coming back. So definitely something to watch. And as you said, be open to it. That's going to wrap it up for us today. Thank you so much, David, for all your comments and joining us for this episode. And for those of you that are interested in kind of learning more as we are trading during the market hours, please join us on IBD Live. We start up 10 minutes before the open at 6:20 Pacific time, 9:20 Eastern, and we go for a full hour and a half plus. Tomorrow, we're going to have David Ryan in the hot seat. He joins us every week on Tuesdays. He is a 3-time U.S. investing champion and a former protege of the founder of Investors Business Daily, Bill O'Neill. So it's always great to get his thoughts. And again, hopefully you can learn a lot from these episodes. That's our goal, to provide education along with the education we provide here every day on Stock Market Today. So thank you for joining us, and hope you join us again tomorrow after the close. Bye-bye now.